The following segment is sponsored by El Tigre Silver Corp., trading on the TSX Venture Exchange under the symbol ELS.V and on the OTCQX as EGRTF. El Tigre Silver Corp. Is focused on silver exploration and development in prolific Sonora State, Mexico. Find them on the web at eltigresilvercorp.com. Join me for a conversation with a frequent guest of the show, David Morgan, the Silver Guru, an expert on money, metals, and mining, also a lecturer and an author. Mr. Morgan has written Get the Skinny on Silver Investing, available on Amazon.com. His website is themorganreport.com. David, welcome back to the program.
Oh, it's good to be back.
Now, I think it would be safe to say that we've had an upswing in the market that's maintained itself recently. Perhaps it's time for those who've been holding off to jump back in and get their feet wet. Don't you agree?
I do. I mean, the old adage, not only in the markets but in life in general, is timing is everything. I mean, you're getting off the bus at that certain point in time and see the woman of your dreams and end up marrying her. I mean, that's a timing event. I mean, there's lots of things that I don't want to belabor the point, but it's really safer to buy when a bottom is confirmed, and we're almost at the point where I'd say the bottom for the metals is confirmed. Certainly looks that way. As you well know, Ellis, I called the bottom in silver, and it's stuck to it, and so far that is the bottom. And that's way back at the end of June 2013, but it went sideways for 7-8 months. So we've broken through the $21 level, which is a level that, for me, for my work and technical work, shows that's basically the level we needed to achieve and go up through. And we have, and we're above that level, and we maintained it for some time. This doesn't mean that it's 100% accurate, but the probability is quite strong. So if you're buying now after the bottom is in, assuming I'm correct, then you have a lot of time that you haven't wasted. If you have cash on the sidelines, you're paying a little bit more, certainly, but it's a little safer to buy after the forming of the bottom rather than try to pick the bottom, because even if you got in a few months ago, which wasn't a bad idea if you're a long-term investor, but if you're looking to time the market or you want to be certain or that type of thing, it's probably better to wait. And this is a good time, definitely. Will the market back himself from this point? Yes, it probably will. Once we have this kind of momentum and this kind of volume behind us, chances are very strong again that we've seen the worst that we're going to see.
Absolutely. And another indicator that things are turning around is the audience, our audience. And our audience is feeding us more questions about purchasing stocks, and they're coming more often. One of these questions that has come in from one of your subscribers at the Morgan Report reads as follows. I'm a new member who lives in Friday Harbor, Washington. Is it possible for you to show the 3 best performing stocks, mid-tier and speculation stocks, like you do for the top tier? His focus, David, is typically on the smaller companies.
Yeah, well, that's a great question. I think anyone that's a member or thinking of becoming a paid member should know a few things. One is that we believe and have from the inception of the Morgan Report that big money goes into big company, mid-level money goes into mid-tier companies, and speculative money only money can afford to lose goes into these very small micro-cap stocks. There's a reason for that, and that is that we balance risk and reward. So what he's asking is that I have a methodology that I will not give out that takes the top tier companies, these are billion-dollar type market caps or higher in most cases, where you have all kinds of good data about how much they're earning, if they're making more profit or less profit, if they're cutting margins or not, that type of thing. And those stocks are not that difficult to analyze, because if you're in the gold business, the market doesn't care if the gold comes from South Africa or if it comes from Canada, it's gold. And so what you're really trying to do is determine what is the most profitable, well-run organization that produces a commodity, or money, if you want to call it money, and I certainly would. So we look at several variables every month and say, out of all the top-tier companies, which there are very few that we consider to be long-term buy-and-hold situations, here are the 3 that are performing best this month. And normally those companies maintain that position for usually a few months or maybe even years. And then there's the other ones. In fact, there's one that had made the top-tier list that just really hasn't done much. It hasn't met its quarter results for, I think, like 10 quarters in a row. We're probably going to drop it off in the next issue of the Morgan Report. So then if you go to the mid-tier, that's a much more difficult situation. You could run the same analysis, but it's very much more difficult because there's too many variables that are unknown, meaning a lot of them have exploration potential. So how do you factor in which company has the most exploration potential? That is impossible. You make an educated guess. And then on the speculative side, it's absolutely impossible. There's not enough data, so you cannot do this. So I will be answering this gentleman because at the level of service that he is at, we do promise to answer every email that we get. It's not always myself personally. It could be me or one of the staff, but you do get an answer. But that's the answer. So, and this is one more comment, Ellis, and that is that the Morgan Report does not focus that much on the smaller companies. We do it because there are opportunities there that we feel are worth taking speculative capital and moving it into. But what I try again and again and again to emphasize is that nobody, no matter how much you trust an individual or their capabilities, can pick these companies on a single on basis. So you need the same dollar amount into like 5 of them or 10 of them at the most. We try to keep this list at 10 or less. And that way, one company that doesn't do anything close to what we expect. In fact, you might be your personal favorite, blows up, but one that you thought wasn't as good or whatever takes off to the moon. And those kind of situations are almost impossible to forecast. And of course, I get the question constantly, well, which one of these small companies is your favorite? None. You have to diversify. You have to have a basket of them. It's impossible to pick just one. We do not spend most of our ink on these small, teeny-weeny companies. And most of the guys that have done that are kind of out of business right now. And some of these companies will come back. Some will never come back. We have the track record that we put up against anybody. It doesn't mean that we haven't lost money the last couple of years. We have, but less percentage-wise than some of these people that do nothing but look at these micro-cap, small, little companies. And most people in the sector that get these newsletters are not that sophisticated in some cases. Some cases they are. I can't make a real general statement here, but what I can say is that most of the letter writers focus on these smaller type companies, when really, if you want to focus on making money, you want to go get money where they're making money, especially in the top tier where these companies, I think every one of them is up from where we recommended them, and that's not the case on these speculative companies. Some of them actually folded. One that's happened recently was a great story stock, and assets are there, et cetera. I don't want to belabor too much, but didn't work out.
We'll be right back. The Ellis Martin Report is sponsored by El Tigre Silver Corp, trading on the TSX Venture Exchange under the symbol ELS.V and on the OTCQX as EGRTF. Silver has been considered a precious metal for 6,000 years and currency since 600 BC. It's been commercially mined in Mexico since 1530 in mineral-prolific and mining-friendly Sonora State, where El Tigre Silver Corp's 5,000-meter drill program is now underway. El Tigre's properties with gold and silver mining concessions span approximately 267 square miles. With an attractive share structure and a strong, proven management team, El Tigre Silver Corp is poised to identify a resource in an area that from 1903 to 1938 produced 75 million ounces of silver and 380,000 ounces of gold. Additionally, their tailing stockpile is currently progressing to production. Learn more about El Tigre Silver Corp by visiting their website, eltigresilvercorp.com, or click through El Tigre's logo on the homepage of our website, ellismartinreport.com.
We offer expert opinions only. Find them on our website, ellismartinreport.com. That's ellismartinreport.com.
And we're back. You forwarded me another important question again from one of your subscribers. I want to start buying and trading the stocks listed on the Morgan Report. Of course, I will use the Basic Plus service. I will only be investing around $500 to $1,000 to start, and I'll only be able to add a few $100s each month or so. What website do you recommend that I use to trade all the stocks recommended on the Morgan Report? Because I know that many stocks are Canadian and some brokers don't allow them to be traded.
Okay, pretty much just read the answer and I can elaborate on it. With all due respect, based upon the amount you're investing, it would be a disservice to you to buy the Morgan Report. And I really mean that. I mean, most people that are considering a subscription part would be much better off if they have somewhere in the like $10,000 level to devote to the precious metals. Remember that I am an advocate that you don't put all of your money in gold and silver. Now, I'm also free market. If you think that's the only market to be in and you've convinced yourself that's the way to go, I'm not going to dissuade you. You've made up your mind, that's fine. Personally, I think you're better off diversifying somewhat. I'm really in a commodity bull. I think you should have precious metals. I think you should have some energy, and I think anything to do with the food industry or water is probably all good areas to invest in. We don't have the capability to go in those other areas. I do personally, but we don't write about them because I don't have the staff to cover all those other areas. Without little to invest, you'd be better off to just buy a gold mutual fund. Like Frank Holmes, for example, runs a good mutual fund. So does Hathaway. There's several out there. You could Google that. I also told him that I thought the Petaluna people was somebody he could contact, maybe give them a call and tell them his situation, and they might be able to, I know everyone over there, almost every broker even, and it's been around for a long time. They do specialize in the mining sector, and they're good people overall. But that's the idea. I said save your money. Probably best to invest in the real metal first. Don't get too anxious to build up in the stock side unless you have pretty good net worth. So that's being of service to him in my view. I mean, the service is don't buy my service. It's not appropriate.
And when you're investing in these markets, the sophisticated investor with the means to risk more, they typically deal with firms, as you said, that can buy these Canadian stocks. And you really want to be able to call a broker that knows the market and can buy for you immediately when you're ready, rather than having to use an online e-trade portal or venue. Deal with someone you know and trust.
Yeah, I think it depends on the level of the investor. I think if you're a beginner, it's actually better to pay for a full-service broker that has a good reputation, such as Penaluna. There's a couple others I recommend in the How to Use the Morgan Report section. I don't like to be beholden to one because they think, I'm getting a kickback or something, and I'm not. There aren't that many I recommend. There's one over in Seattle, Washington that has dealt in this area for years and years. In fact, one of the largest coin dealers in the country uses him as his broker based on my recommendation. He's extremely happy with him. So when you do buy the report, the first thing you should do is read the How to Use the Morgan Report. I do my best to keep people safe. In other words, it specifies how much you should put in the metals, how much should be in the metal itself, how much should be in the stocks. In the stocks, how much goes to the top tier, how much goes to the mid-tier, and how much goes to the speculative section, how to divide it up. All this stuff is outlined in the How to Use the Morgan Report section. Again, we do our best. I still hurt when someone calls me and tells me that they put a ton of money into one of these story stocks, especially if they haven't spread it out among 5 or 10. But it happens. But I don't have a lot of guilt because I'm really upfront about not doing that. It's spelled out in How to Use the Morgan Report. I've said it on shows like this. I say it publicly and privately. So I don't know what else I can do. I can't force people to make good decisions. And certainly, speaking from experience, I did that myself in my early investing career in the mining sector. Going into my early 20s, I did nothing but, well, that's not true. I did buy some of the top tiers, but I also put too much money in some of the speculative companies. And when I started the Morgan Report, my initial thought was I wouldn't do any penny stocks, none. But I changed my mind because if you can find value and make determinations and do what I've stated for the 5th time, spread it out. In other words, make 5 bets instead of 1 bet. Now, you have a pretty good chance, and we had very good success early on, but that part of the cycle's over, and that part of buying the smaller stock companies, you can actually buy crappy companies at the right time of the cycle and do well. And it's unfortunate, but that's the way markets work, and that part of the cycle was basically between the year 2000 and, say, 2005 or so. I mean, a lot of these companies went up 5-fold, 10-fold, or whatever that really had no merit, but there was so much money pouring into these companies that drove the prices higher. That part of the cycle's over. It actually will come back, but it'll come back at the very end of the cycle, and I don't see that happening for probably 2016 or so. Thank you for the opportunity, because this will help people that are contemplating should they get the Morgan Report or not, the paid version. Really, the Morgan Report is the paid version. There is an e-letter. We refer to it as the free letter or the silver update letter, but that's free, and of course everyone's welcome to that. But as far as trying to make investment decisions and helping you with research and that type of thing, it's not for everybody. If you don't have a certain amount to invest, then honestly, don't waste your money. Don't spend it on another silver coin or another, at this price, another 4 or 5.
You can follow the Morgan Report on Twitter, YouTube, and you can, of course, subscribe to the Morgan Report by simply logging on to themorganreport.com. David, thanks very much for joining me today on the program.
My pleasure. Thank you.
I've been speaking with David Morgan, again, of themorganreport.com. Listen to this segment again on the podcast page of our website, ellismartinreport.com. This segment has been sponsored by El Tigre Silver Corp., trading on the TSX Venture Exchange under the symbol ELS.V and on the OTCQX as EGRTF. El Tigre Silver Corp is focused on silver exploration and development in prolific Sonora State, Mexico. Find them on the web at eltigresilvercorp.com.